Hey folks, welcome back to Whiteboard Invest. Today, we're diving into some highlight crypto news and exploring how these updates might sway different coin prices in the market. Are stablecoins being minted non-stop ahead of a major price surge? U.S. Treasury. NFTs are prone to fraud and scams, need stronger regulation. ETH to outperform BTC in the near future. Polyhedra Network rebrands token to ZKJ following ZK Sync drama. Layer 2 platform for RWAs, Plume Network, raises $10 in seed round. Oh, and just a friendly reminder, we put in a lot of effort into our daily research to save you from the hassle of collecting and sifting through market news. So, stick around till the end to stay informed and sharpen your research skills. Let's jump into the details right away. A big stablecoin minting event just happened. Could this be the start of a price surge? Cumberland recently minted 118.54 million USDC in a bit over 30 minutes and sent it straight to Binance on May 30, 2024. This move is pretty typical for market maker, funds, when they're gearing up to pump prices or stockpile tokens they think have promising price charts. Cumberland is a well-known fund, much like Jump Trading, DWF Labs, and Wintermute. Last year, both Cumberland and Wintermute did something similar with USDT, minting and accumulating in 2023. It's not uncommon to see large amounts of USDC moving around. For instance, during Bitcoin and Ethereum rallies or broader market booms, sudden spikes in USDC and USDT minting have been observed. Market makers play a crucial role in regulating and providing liquidity for the crypto market on centralized exchanges. CEX. To drive asset prices up without spending too much of their own money, they use a range of complex techniques. Before pushing prices up, MMs need to make sure the market supply is low and selling sentiment isn't high. This setup allows them to lift prices without facing significant resistance from sellers. MMs use bid, buy, and ask sell walls to manage and adjust market prices. These walls help maintain stability and provide liquidity for market orders. A bid wall involves placing buy limit orders just below the market price to support it during large sell-offs, creating a sense of safety and price support. Conversely, an ask wall involves placing sell limit orders just above the market price to control the pace of price increases and provide liquidity during large buy orders. By gradually raising these bid and ask walls, MMs can create a sense of FOMO, fear of missing out, in the community. As prices rise, market participants feel compelled to buy, which further drives up prices. The success of these price-driving strategies depends heavily on market psychology and buying power. After a period of price consolidation, if MMs sense that the market is excited and buying pressure is strong, they will continue pushing prices up to capitalize on the FOMO. Right now, the market hasn't shown significant movements, with the 4-hour Total 1 chart, representing the total crypto market capitalization, still trading sideways. According to the U.S. Treasury, bad actors are using NFTs for money laundering, although they rarely use them to fund terrorism. Even with significant changes in the NFT market, the Biden administration still sees many potential risks for consumers. Just yesterday, May 29th, the Treasury released its first financial risk assessment on NFTs, spanning 29 pages. The report warns that NFTs are highly susceptible to fraud and scams. The Treasury notes that most money laundering and terrorist financing activities typically involve fiat currencies rather than digital assets, but money laundering is starting to surface in the NFT space. This is the first time the U.S. Treasury has mentioned NFTs in relation to money laundering and terrorist financing. The report points out that criminals are using NFTs to launder money, combining these transactions with other tactics to obscure the illegal origins of their funds, making investigations more difficult. One major issue is the anonymity of buyers and sellers, which has led to an increase in theft and abuse in the NFT market. Additionally, many NFT platforms don't require customer information, making it harder to track stolen or illegally obtained NFTs. The report also delves into problems like rug pulls, fake sales, and copyright infringements, especially when criminals impersonate legitimate rights holders and inflate the value of artwork through NFTs. These fraudulent activities are challenging to investigate due to the lack of transparency and customer identification. To tackle these issues, the Treasury suggests that authorities establish specific rules and guidelines for the NFT sector to clarify existing obligations for NFT platforms. They also recommend that officials engage with the private sector to inform stakeholders about regulatory requirements that could help develop compliant NFT platforms. The U.S. government has been studying money laundering and terrorist financing in the crypto market for years. Back in March, another government study on NFTs concluded that there wasn't a need for separate laws concerning copyright and trademark violations in the NFT space. In summary, the U.S. Treasury's first financial risk assessment of NFTs highlights significant concerns about their use in money laundering. While fiat currency is still the primary medium for such activities, the emerging misuse of NFTs calls for clear regulations and collaboration between authorities and the private sector to protect consumers and ensure market integrity. Oh, by the way, the content in our video should not be considered investment advice, just for entertainment only. Investing is speculative. When investing, your capital is at risk. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. The ETH-BTC pair is looking bullish in the short term, especially after the Ethereum spot ETF got approved last week. So, what should the market and investors expect? It seems like ETH is set to continue its upward trend against BTC in the near future, with the excitement around the Ethereum spot ETFs drawing a lot of investor interest. This means ETH is likely to rise faster than BTC soon. Currently, the ETH-BTC ratio stands at 0.056, climbing steadily from a low of 0.045 in mid-May 2024. This growth follows the SEC's approval of 8 Ethereum spot ETFs on May 24, 2024. Unlike Bitcoin ETFs, which start trading right after approval, these Ethereum spot ETFs might not become active for a few weeks or even months. K33 Research has highlighted that ETH is in a strong position for a short-term price jump compared to BTC until these Ethereum ETFs hit the market. Their market report from May 28, 2024, even recommends boosting investments in ETH at this moment. In the next few weeks, companies filing for these ETFs will be working hard to attract investors, aiming to build a solid foundation and strong interest for the ETF launches. Meanwhile, ETH is indirectly feeling the impact of the massive debts of Mt. Gox being repaid to creditors. According to Lim, ETH is undergoing a revaluation and price adjustment phase. He believes ETH has been undervalued for a while, which means the market is now reassessing its long-term value. After the Ethereum ETF approval, the spotlight is shifting to other large-cap tokens like Solana, SOL, and Chainlink, Link. There's a lot of buzz around SOL being the top candidate for the next ETF, despite ongoing debates about whether SOL qualifies as a security. ETF experts say SOL is the only one that meets all the necessary criteria and has the potential to become an ETF. However, the crypto community remains skeptical about a Solana ETF being approved this year. On Polymarket, a crypto betting platform, the odds are only 13% for a Solana ETF approval in 2024. In summary, with the recent approval of Ethereum spot ETFs, ETH-BTC is trending upward, and ETH might outpace BTC in the short term. While Ethereum ETFs are on their way to becoming active, market research and investor sentiment favor ETH. The focus is also moving to other major tokens like Solana, though the chances of a Solana ETF in 2024 appear slim. Polyhedra Network has decided to switch its ticker symbol to ZKJ after a week-long unresolved dispute with zkSync over the ZK ticker. So, what's the story here? Polyhedra Network, known for its zero-knowledge interaction protocol ZK Bridge, announced they'll use ZKJ for their upcoming listing on HashKey Global and other exchanges. This new ticker, ZKJ, stands for ZK Join, aiming to symbolize a unified and open ZK community. Tiancheng Xie, Polyhedra's co-founder, along with big names from Polygon and Starkware like Sandeep Nailwal, Brendan Farmer, Eli Ben Sasson, and Shafi Goldwasser, issued a joint statement. They emphasized that ZK should belong to the community, not be a trademark owned by a single project. They're urging everyone to pressure Matter Labs to drop all trademark applications involving the ZK ticker, condemning ZK Sync for actions they view as theft, bullying, and monopolistic behavior. The whole dispute started because ZK Sync wanted to use the ZK ticker to assert its leading role in ZK rollups for Layer 2 technology. Things hit a boiling point when Bybit announced it would change Polyhedra's ticker and list ZK Sync under ZK, even though Polyhedra had been using it on the exchange for a while. Polyhedra quickly fired back on Twitter, accusing ZK Sync of colluding with exchanges to snatch their ticker. They challenged the community to see who stands for justice versus who sides with the bully, but the reaction was mixed. Many users backed ZK Sync, saying Polyhedra didn't deserve the ZK name because their March airdrop didn't deliver the expected value to the community. All this drama has taken a toll on Polyhedra's token value. Over the past week, their token ZK dropped by 16%, now trading around 126. This decline shows the market's reaction to the controversy and the split opinion within the community. In a nutshell, Polyhedra Network's decision to change its ticker to ZKJ comes after a failed attempt to hold on to ZK amid a spat with ZK Sync. They want to promote a united ZK community, supported by key figures in the industry. Despite their efforts, the community's reaction has been divided, and the value of their token has taken a hit. Plume Network just wrapped up a successful $10 million seed funding round led by Han Ventures, with big names like Galaxy Ventures, Superscript, A Capital, SV Angel, Portal Ventures, and Reciprocal Ventures jumping on board. They also had angel investors from top projects like Wormhole Labs, Eigenlayer, and Say Network. Chris Yin, the CEO and co-founder, shared that Plume Network is taking a unique approach compared to other real-world asset RWA platforms. Instead of focusing on permissioned blockchains, Plume is all about a permissionless, crypto-first environment. Their Layer 2 blockchain is EVM compatible and comes with end-to-end tokenization tools, making it easier for everyone, from big institutions to retail investors, to get involved. Their mission is to solve the major issue of having no permissionless blockchain with the necessary infrastructure for RWA. Plume aims to simplify RWA application deployment, attracting traditional finance developers and businesses to the crypto space. Plume is also building a dynamic DeFi ecosystem, offering various ways for users to profit from RWAs, like lending, trading, and leveraging. In their testnet phase, they've already attracted over 80 projects, including collections, alternative assets, synthetic assets, luxury goods, lending protocols, and perpetual trading DEX. In a nutshell, with this funding, Plume Network is set to revolutionize the RWA space by providing a seamless, compliant, and accessible blockchain environment.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.